Hello and welcome from Mexico City to this episode of Crossing Borders with Nathan Lustig, where I have conversations with entrepreneurs doing business across borders and the people who support them that have some connection to Latin America. This episode is brought to you by LatAm'List.com. If you like this podcast, you'll probably like LatAm List. Check it out for daily Latin America tech news updates. My guest today is Michael Sidgmore, partner and co-founder of Broadhaven Ventures, a US-based Fintech VC that's invested in 5 startups in Latin America. We talk about Michael's background, first in soccer, then in tech and banking, and then which led him to become a VC in Silicon Valley. We cover some of the biggest trends in Latin America fintech, how Latin America's fintechs might look more like Asian fintechs than US fintechs, and some of the verticals we're both looking at for the next few years. I hope you enjoy my conversation with Michael Sidgmore. Hey Michael, welcome to the podcast. Thanks for being willing to do it.
Thanks for having me, Nate.
So where are we in the world today?
We are in beautiful Condesa, Mexico City.
Awesome. And so tell me a little bit about what you're working on these days.
Yeah, so I'm a partner and co-founder of the early stage fintech VC fund called Broadhaven Ventures. We invest in early stage fintech globally, but we have a large focus on the US and Latin America, where we actually have 5 of our 16 portfolio companies.
Awesome. And how long ago did you guys get started?
So at Broadhaven Ventures, we started our fund at the end of 2016. We were built out of a market-leading fintech investment bank called Broadhaven Capital Partners. That's done about $45 billion of M&A transaction volume that my partner and co-founder of the fund, Greg Phillips, created. And we're able to kind of use that platform as a way to help our early-stage fintech companies get connected into large financial institutions, help them raise debt capital, equity capital. But we're not doing venture to be lead gen for banking. We're doing venture to invest in great companies and partner with great founders and help them build businesses. But it's really helpful kind of having connections, network, and the ability to help our companies at the top end of the market.
So where are you from originally?
So I grew up right outside of Washington, D.C. I lived in London for 5 years. Went to school there. Initially tried to play soccer abroad in the UK. Ended up actually getting injured. Had 2 hip surgeries. So soccer turned into a nonprofit job. I'm working at a company called Room to Read in the UK. And then went to Middlebury College in Vermont for a year. And then actually transferred back to London. Did my full undergrad at LSE in London. And then have much more recently, over the last 2 years, really made my way down to Latin America quite often. So spent a lot of time down here working with our companies.
And did you always know you wanted to be on the investment side in tech, or was that something that just came up in your career?
You know, it's kind of something that evolved over time. So I actually went to school at LSE studying international relations and international development. So I was fascinated by that. Economic development was really interesting to me. Working at Room to Read, which was an international literacy NGO, I was fascinated about how do you kind of build kind of, economic development in countries, things of that nature. But I was also fascinated by the business side. So Room to Read was run like a business. It was run by an ex-Microsoft guy. It had many senior Goldman people. So it was fascinating to me to see a nonprofit being run like a business. And that kind of piqued my interest in business. And then at LSE, I got involved in the world's largest student conference in hedge funds and private equity. So that's where I kind of learned about the world of investing and really saw kind of, okay, how do you look at and invest in companies that could be for-profit companies after having worked at Room to Read? And then I wanted to really kind of find a way to do both, where you could invest in or build companies that could generate positive financial returns for people, but also make a huge social impact on people's lives. So that was what really kickstarted my investing career. I then went to Goldman Sachs and was on the principal strategic investments team, so a balance sheet investing team, investing into fintech companies. And then was on the startup side. So I built a sales team at a company called Mosaic, a solar finance business. And then I was one of the early sales hires and helped build the sales team pre-product at a company called iCapital Network. So I've been on both sides of the table, but really what it comes down to is I love helping entrepreneurs.
What are some of the biggest lessons learned from the entrepreneur side that you use now today?
So I think the first thing is that, especially early on, having been post-Series A at Mosaic, and pre-product and pre-launch, right after a seed round at iCapital, is businesses go through their ups and downs. Mosaic had to pivot its business. We pivoted from a commercial solar crowdfunding platform to a residential home solar loan originator that has since raised about $300 million of equity from Warburg Pincus. And I think what I learned the most was one is just stay the course. Try to end every day on a high. Every day in a startup is going to be volatile, but if you can end every day on a high, that's as good as you're going to get. And just to kind of stay true to the mission. So one thing that the Mosaic founders did an incredible job of, and I have a lot of respect for them for doing this, is they were climate change activists, but they wanted to finance as many solar panels on roofs as possible. Initially started out as commercial solar projects, crowdfunding for that. But then they realized that the way to make a viable business out of it and create a bigger impact was to actually pivot to a different business. So they stayed true to their mission, kind of withstood all the volatility, and dealt with the kind of the day-to-day of a startup and figured it out. And I think that's honestly probably one of the biggest lessons I've learned is things are not going to go well often. You can't worry about that. You just kind of have to think about, what is it that you want to create and why do your customers?
So thinking about fintech, why is that part of the investment thesis? What's so interesting about fintech these days?
So for me personally, I'll answer kind of me personally, and then why I think fintech is so important kind of to people's lives. So and those two things are really blended, because I think where it comes down to is when I think about kind of investing, I want to think about how am I able to create the biggest impact possible. And I think people's financial lives are such an important part of their lives. Maybe how they can have a roof over their head, maybe how they can send their kids to school, maybe how they can get to work if they need a car loan. So there are a number of reasons why fintech is so important. Financial services is so important in people's lives, and I think investing in fintech companies and providing people with better access to capital, whether they're consumers or small businesses, providing them with ability to better manage and understand their financial life. Many people are not financially literate. In places like Latin America, there's 400 million unbanked people. So there are people outside of the financial system who can't participate in the formal economy. So I think there's a personal passion of helping people kind of participate in the kind of formal economy. And then from the kind of fintech perspective, why is that interesting? I think it's 15 to 20% of world's GDP. It's kind of what makes the world go around. So banking is the lifeblood of many economies. Small businesses are the lifeblood of many economies. So finding ways to provide people and businesses with access to capital, helping them manage their business better, helping them manage their financial life better is really important. And I think you're seeing that kind of play out in Latin America, where you have plenty of unbanked people, under-penetrated banking ecosystem, and you have all these fintech companies that are being created to change that.
So going into Latin America, I'll ask you the question that everyone asks me. How did a guy that grew up in the U.S. and spent time, in your case, in London, end up being interested in Latin America and making investments here?
Yeah, so I think I think there was a subconscious interest that I may not have realized until more recently, which is that my grandfather, my mom's side, he actually spent a good portion of the 70s and 80s in Latin America, spent a lot of time in Brazil and Uruguay, and of building businesses there and then bringing them back to the U.S. So hearing his stories probably kind of gave me a subconscious view of wanting to be involved in Latin America. And then I think more recently, and to be honest, more fortuitously, ended up investing in a company called Credit Justo in 2015. So it's a Mexican small business lender, recently raised $42 million Series B, led by Point72. Goldman Sachs also participated in the round. But I was introduced to David through another portfolio company, COO, and got to know David, the founder of Credit Justo. He's also an American guy, but he met his best friend, Alan Apoj, at Brown. They were both went to Brown together. Alan is Mexican, David's American, but spent a lot of time in Latin America. And they decided to create a Mexican small business lender because in Mexico, the credit penetration for small businesses is about 36%, about 30+% lower than the next lowest country in Latin America. So huge market opportunity to serve 5 million small businesses. Was incredibly intrigued by what David was doing. Ended up investing into David's business and David and Alan's business personally in 2015. So I got involved. And then when we built Broadhaven, I ended up co-leading a seed round with Elevar Equity in 2017. I joined the board of Credit Justo, and that's when I really started coming down to Mexico often. So came down once a quarter for board meetings, really wanted to spend time in the ecosystem and really understand it, and found a lot of really interesting things about the ecosystem, both in terms of how people think about banking, how people think about the use of cash. It's a cash economy. There are things that people may not understand. People like you and me may not have understood unless we've spent time down here, that something like Uber, where in the US, the innovation is paying through a credit card, paying digitally, and not having to worry about paying the taxi driver in cash. Here, Mexico is a 50% cash economy. So Uber accepts cash. So there's just a whole set of things that are very different about the ecosystem that you really have to spend time down here to really understand. And the more time you spend down here, the more you realize how big the opportunity is in financial services to build massive platform businesses. And quite honestly, that's what I'm really excited about down here.
What were some of the biggest surprises that you ran into looking at the fintech ecosystem that maybe people in the US wouldn't have any idea about?
Yeah, I think this goes back to what I just talked about with things like, how people think about cash versus credit. In Mexico in particular, 15% credit card penetration. That's foreign to us in the US, where most people have credit cards. Most people have multiple credit cards. Here, large majority of the population doesn't have credit cards. You have a 50% cash economy. So a lot of people operate outside the formal economy and want to continue to do so. So I think there's just a number of cultural differences and differences in the way people think about money, think about their financial lives. A lot of people don't save. A lot of people don't invest or have access to the capital markets. And a lot of people don't trust banks. And in some cases for very kind of legitimate reasons. There have been times where people have wanted to get their money out of banks but couldn't. Tequila crisis is a perfect example. So I think this is kind of a something that goes back in history of how people think about their financial life, and you really have to kind of spend time on the ground here to understand that. So that's why it's been, from my perspective, so important to be down here and really understand the ecosystem, see how people interact, talk to people, and once you understand that, then I think you can start to see what the opportunities are. And quite honestly, I think the fintech ecosystem in Mexico and LatAm more broadly, Brazil is also a massive market, is as exciting as anywhere in the world.
So talking about Brazil, you've had some experience doing business in Brazil as well.
Yeah.
What have you done in Brazil, and why is Brazil interesting?
Yeah, so we're investors in 2 companies in Brazil, 3 in Mexico. The 2 companies we're invested in Brazil are Covey, which is a fleet management solution for on-demand drivers. So in Brazil, you have 85% of the people who don't own a car. You also have a situation where on-demand drivers, so Uber and Didi drivers, actually make 2 to 3 times the income of 75% of the population. But there's all these people who can't get cars. They therefore can't make a living driving Uber, Didi, etc. So Covey provides a fleet management solution where they lease cars. They then lease them out to Uber drivers and Didi drivers and enable them to earn a living. So that's one company we have down there. The other company is a company called Grow Mobility, which is a leading mobility business that has scooters, bikes, mopeds, etc., enabling people to kind of get around cities more efficiently. So I think what's really intriguing about Brazil relative to other parts of Latin America is just how big the market is. So for context, we're investors in a small business lender, Credit Justo in Mexico. They're attacking a market that has 4 million plus formal small businesses. It's a massive market. They can take a small portion of market share and build a really big business. But Mexico relative to Brazil, 8.5 million small businesses in Brazil. So the market is just so vast, and there's such an opportunity to bank the unbanked, whether it's consumers or small businesses. I think it's no surprise that Nubank has 15 million accounts open in Brazil. They're a digital bank in Brazil. I actually read today that they have more accounts opened combined than Revolut, Monzo, and N26, all multi-billion-dollar digital banks in Europe. So it just speaks to the opportunity that there is to build a very large platform business in either Brazil or Mexico or broader LatAm. And I think what that means is that unlike in places like the US or Europe, where you have to kind of take a very verticalized approach and then try to expand horizontally, but many fail doing that because it's so hard, you need so much capital to do that. In Latin America, you can build a horizontal business after being vertical to start. And I think that just gives you a massive opportunity to build a big platform business, multi-product business. You may start out as on the consumer side and go into SMB. You may start out on SMB side and go into consumer. And you can do that because the differences in the banking system.
Yeah, part of our thesis has been that Latin America is going to look a lot more like Southeast Asia and China, where you have a lot of these horizontal businesses and fewer really big winners. Mm-hmm. And partly because of the way that the ecosystems are working, but also because just of geography. So Latin America and Southeast Asia are the places where there are mega cities.
Yeah.
So they have similar problems. So Grow Mobility is a really interesting one where if you look at Southeast Asia or like maybe a Gojek in Indonesia, you have transport being the wedge to do all sorts of other things.
Yeah.
So it's definitely an interesting space where I think the US is maybe behind a little bit on these things because we have generally been, you have one piece and then you can't compete, you can't move away because there's so much competition.
Yeah.
But in LatAm and Asia, there's not.
Yeah. And banks in places like the US, they serve a whole spectrum of customers from subprime all the way to prime. In a place like Mexico, we were talking about this a little earlier, the four top banks in Mexico, they serve their prime customers. That's all they need to serve. And they end up being the most profitable banks in the world. I think you said, some of the banks are kind of like 55% plus return on equity. That's things we don't see in the US. One other thing to hit on too, what do you think about when you look at, because you've done a lot of work kind of comparing Southeast Asia to Latin America, how much do you think the impact of mobile phone penetration will have on financial services in Latin America? And do you think that will leapfrog kind of some of the kind of hardware solutions maybe and get into like QR codes, payments, and all that stuff? Because that's one of the things that I've been kind of thinking about, and would love to hear your thoughts on that.
Yeah, I think there's a huge opportunity for LatAm to leapfrog, not go to the US markets solutions to the problems and look at what China has done, especially in payments and QR codes. I think it's probably a little more difficult in LatAm because people think of Latin America as maybe one or two markets, but in reality, they're broken down into 10 or 12 different markets, or even maybe more. So it's probably more difficult to have a unified solution like you would have in China. But I think Southeast Asia is interesting, where you have like some countries are very much the Alibaba kind of mafia, others are the Tencent mafia, and I think you'll start to see stuff like that in LatAm. I think you're seeing, especially in the Credit Justo case or in our portfolio company, Omnibank case, you're seeing a lot of leapfrogging for stuff that, because of the data that's available in Latin America, that isn't available in the US, and kind of the legal systems where most people would think, oh no, Latin America is way behind. In these businesses, Latin America is actually way ahead. Yeah. Way ahead. So I think there's a big opportunity to have some leapfrogging there. And using the Nubank example, they started with a bunch of people that were kind of the best clients from the banks and gave them a better experience, right? And that's an easy way to really take profitability from banks that were charging in Brazil. I think the interest rate when they started was 350% on average. It's just nuts, right? But when the first bank account for somebody is a neobank, like in our case, we had a funny kind of talk at our event yesterday with one of our team members, JT, who's from China, and she's still unbanked in Chile after a year and a half. Really? And she has a job at a VC fund, and she was able to get a bank account in a week from our portfolio company Albo in Mexico because she's traveling in Mexico for 2 months. Yeah. So her first experience in the financial system that works is a tech company. So I think there is definitely the ability to leapfrog.
On that point, I think that's actually one of the key features of what will make fintech companies successful in LatAm is the customer experience. And when you have such a large or underbanked population that has been woefully underserved by the traditional financial institutions, you can create much better customer loyalty and trust. And that's why I think actually too, a lot, like Asia, a lot of these kind of non-fintechs becoming fintechs is going to be a theme in Latin America too, where you have high frequency usage models, whether it's delivery, Rappi has RappiPay, a wallet. Grow has GrinPay, a wallet and a payments platform. Business like Covey is getting into financial services. So I think these high frequency usage models that are addressing massive needs, kind of initial customer needs, and then being able to offer a financial services product or products, I think that's going to be a really interesting and defining feature of LatAm fintech that's quite different than the US.
Yeah, I think in the US too, when you think about credit scores, that's another place that is going to be really different than Latin America, because in the US, banks know if it's a 700, what a 700 means. Yep. But in Latin America, most of the countries, if not all of them, only have the negative bias. Mm-hmm. So if I have 10 accounts that I've paid every single month for 5 years, and I just have one of those that I mess up on, the only thing on my credit score is the one thing I did bad. So with startups that are coming in, maybe not creating their own credit scoring, but at least taking the data that you're using, the positive credit scoring, into their own models, that's a massive game changer for Latin America. And I think it's similar to, again, what Southeast Asia did, where they didn't have the credit scores. Nobody was on the radar.
Well, you almost have to, as a fintech, find a way around kind of what some of the things you may think of doing in the US, like leveraging things like credit scores that people in the US are tied to as our banks, whereas places like Latin America, people may not want to have credit scores or want to share their credit scores because they don't trust financial institutions to underwrite them properly. So we've seen a number of lending businesses, both here and in Brazil, that are actually underwriting not on the basis of what the customer provides them, whether it's consumer or small business, but actually just on a number of other data points and features. And you talk about the importance of data. I think this market is actually very interesting for that reason. I mean, you have electronic invoicing that the government mandates. Small business lenders can get that data and use that to their advantage. You don't have that in the U.S. where you can plug in through APIs to the equivalent of the IRS like you can here. And so I think there are actually some really interesting features. Although the market may seem behind to people from the outside, there are some interesting features that make it kind of a little bit more advanced than people might think.
One of the interesting things that we're seeing too is that there's potential for companies from LatAm that have this better data set or better business models to be able to, and it's funny to say, as the US and Europe catches up, be able to move into the US market. So some of those that are not necessarily in fintech so far are like Pipefy out of Brazil.
It's raised like $45 million.
Mm-hmm. They raised a big round. Another company, PSafe, out of Brazil, which opened up in San Francisco about a year ago now. And GymPass is the other obvious one that's been able to launch out of Latin America, but then using the advantages here to go to other places.
That's why we have VCs like you and some of the others we recently had on the podcast, like Pedro at 1VC, who are kind of either based in the US or have ties to the US and can bring the models back from LatAm to the US or vice versa, which I think is really interesting. And particularly as, in the US, as there's an increasing number of Latin Americans in the US. I mean, the kind of household formation by Hispanics is kind of the highest it's ever been and is going to be the largest segment of the population in the US that's growing. So kind of tailoring financial services solutions to them, but kind of taking learnings from LatAm might actually be a really interesting thing to do.
That, and then also there will be at some point the cross-border going back to LatAm from, I think it's going to be 60 million people in the US are Latin descent, and I think 40-something million will also have speaking Spanish as more or less native speakers. Mm-hmm. So there's all of this kind of immigration story where, like, a little bit of an aside, but one of the reasons personally I think Colombians have done so well as entrepreneurs in the region is that there were, I believe, 2 million Colombians in the U.S. that went during the 70s, 80s, and 90s when it was pretty dangerous in Colombia. Mm-hmm. And now that Colombia is, after what's happened in Chile, probably the most stable country in Latin America, which is sort of funny to say, they're coming back and starting businesses. And many of those founders are people that studied in the US or Europe.
Well, I think that you bring up another really interesting point about the kind of burgeoning tech ecosystem in this region. It's that you have a lot of people of Latin descent coming back to Latin America, taking learnings they have from working at Google or Amazon, or Facebook, or whatever company they worked at in the US, and bringing that back to Latin America. And I think for better or for worse, we're seeing a lot of businesses, the Uber for LatAm or the DoorDash for LatAm. So you're seeing a lot of copycat businesses, which is not necessarily a bad thing as long as you tailor it to the region and localize it to the market. But we've been really impressed with the talent in Latin America, in large part because you have people who've learned how to build tech businesses.
So thinking about your next year or 2 years going forward, thinking about LatAm, where do you see yourselves as a fund, and where do you see the ecosystem moving over the next couple of years?
Yeah, so great question. A few things. So one is, I think we'll certainly continue to invest in Latin America and spend a lot of time, both, Mexico, Brazil, Colombia is another market that I think is really interesting. You're seeing a lot of really interesting companies come out of there. So we'll certainly continue to invest in Latin America because, like I said a little earlier on the podcast, I actually think it's as exciting a market for fintech as any other market in the world. And in some cases, there's the ability to build bigger businesses, bigger platform businesses. So that's really exciting. I think in terms of things that we're looking at closely, one is non-fintech companies have the potential to be some of the biggest fintech companies in Latin America. So we're 4 out of our 5 fintech companies in Latin America are actually non-fintech. So Covi in Brazil, Grow Mobility in Brazil. We're investors in Nowports, which is a digital freight forwarding business for Latin America, kind of like Flexport, but for Latin America. there's potential to be a fintech business there, just like Flexport has become a fintech business. And we're invested together in a business called MePOS, which is a restaurant point of sale solution that kind of integrates all of the kind of tech systems that a restaurant uses and enables them to kind of streamline their payments, et cetera. Kind of like Toast for Mexico. But, I think there's the potential to kind of go from software to financial services products, lending, et cetera. So I think we'll continue to look for companies that are actually non-fintech businesses that can become fintech businesses, because there are some really interesting features when you talk about high frequency usage models where people are constantly needing to use something to, in the case of Grow, transport themselves to get to work every day. And if they're going to then put their mobility asset in front of a merchant or in front of a storefront, they can then go into that merchant and purchase something there. So I think there's kind of, the high frequency usage model is something that really intrigues us as a beachhead into fintech and to serve a whole customer base that hasn't been served. The other area that we're really interested in Latin America is kind of banking the SMB. So SMBs have been woefully underserved, particularly in Mexico, but also in Brazil. And there's a huge opportunity to, number one, extend credit to them, but kind of two, borrow from some of the things we've seen in the US where we've invested in software businesses. We're investors in a business called Scale Factor in Austin, Texas, which automates accounting for SMBs, but they're launching a corporate charge card. And they can provide a whole suite of financial services to small businesses, raised about $100 million over the last year from the likes of Bessemer and Cotu, et cetera. And I think what's interesting about the Latin American market is if you can provide kind of a whole suite of services, whether it's financial products or software services to small businesses, you can provide a huge opportunity to them. And then I think one of the other things that's really intriguing is taking that a step further is I think you can actually penetrate the consumer's financial life through the small business, which is not something that you can generally do in the US, but in a place like Mexico or Brazil, you can offer financial products to that employee through the small business platform. And I think that's something that's really intriguing. There's obviously a number of kind of HR startups that are popping up. Jerpa in Brazil is backed by QED. Runa is here in Mexico, as is Worky. And I think there's some really interesting models about kind of becoming a financial service provider, but starting as something else.
Yeah, I think the kind of stealth fintechs are a really interesting model for LatAm going forward.
Yep.
So do you have any books, blogs, podcasts, documentaries that you like to recommend to people, whether it's about startups or just anything in life?
Yeah, so my three favorite books are Hope in the Unseen by Ron Suskind, which is actually a book I read when I was a kid. It was about a kid who was in inner city DC, single parent, and made it out, made it to Brown University, actually, from the worst high school in the country. So that was just a really interesting book for me to kind of, as I think about kind of economic development, what are all the things kind of that you can do to help people kind of get a hand up out of a situation that they may have been in. So that's a book that's kind of stayed with me my entire life. I think I read it 10 times when I was 10 years old, something like that. So I was just obsessed with that kind of, with how to solve those kind of problems. Other two favorite books are Leaving Microsoft to Change the World, which is by John Wood, who's founded Room to Read, this international literacy NGO that I ended up working for. I read his book and then just cold emailed him. So that book changed my life because I ended up working for Room to Read and really learned about how a nonprofit could be run like a business. That was probably one of the most eye-opening things for me from that experience. And then I do love startups. I do love building businesses, and I know how hard it is. So third favorite book is it's an old book. It's from the 90s, but it's a guy, Michael Malone, who he did interview style book, interviewing some of the tech titans from the 90s. So like, the Bill Gates, the Larry Ellisons of the world, and it's called Betting It All. And that I think really encapsulates what it means to be a startup founder, which is you're really kind of sacrificing your life to do something that you so believe in that will change somebody's life or change the world. So that's always a book I come back to. It's just kind of get inspired by people who have just worked so hard to build world-changing businesses. So those are three favorite books. When it comes to podcasts, Magma Podcast to listen to, of course, and then 20 Minute VC I think is a great podcast if you're in the VC or startup world.
Thinking about advice for founders from LatAm, you're a U.S. investor. You've made 5 investments in the region. What are some tips that you have for LatAm founders when they're thinking about pitching a U.S. investor?
Yeah, so it's a great question. I think there are two ways to answer this question. So one is like, what should a founder do? And two, when they're pitching a VC, and two is how should a founder think about structuring their business? So pitching a VC, to be honest, I don't think they should do anything different from what any other founder would do, which is kind of show that they truly understand their market and their customer and understand what problem they're solving for their customer, and then have a passion for what they're doing and show like, this is why I'm building this business. I really care about it. I think one of the pitfalls you have of being in a market where there could be businesses that you copy from other regions is that people just think they can copy a business rather than actually be truly passionate about it. So I think, really having a true reason for why they want to do this. I'll use Nowports as an example. The founders, one of them comes from a third generation freight forwarding family, and the other founder went and worked for a freight forwarding company in Kansas City and had no connections to it, just cold emailed, cold called, ended up working there. And I think that to us showed true passion and understanding for the industry and a desire to change the industry. So I think when it comes to kind of, pitching VCs, it's do all the things that any other founder would do. To their credit, I think YC has done a very good job of training founders. And I think you've seen a lot of LatAm founders. There's an article in Contexto today, actually, the 53 companies that have come from Latin America that have been part of YC. And I think they've done a very good job of kind of helping founders get ready to pitch U.S. investors, because there are more U.S. investors thinking about coming down. So that's part one. Part two is, how should a founder think about structuring their business? And I think this is where they can actually get into more trouble. And it's because the kind of venture ecosystem is a little bit less developed. You have a more immature angel ecosystem. So I think the landmines that founders can get kind of can fall privy to are really around like how they first fund their company. So you don't want an investor who controls too much of the business. You don't want an investor-led board early on in a company. And we've seen a number of companies, particularly in Mexico, where you have maybe an investor with good intentions, an angel investor, family office, et cetera, but they end up owning so much of a business early on. And they end up having an investor-led board where you have 2 investors to 1 founder on the board at seed stage. And that just looks very different from the US, and it makes it very hard for a US VC to fund a company like that. So I think being really careful about how you think about funding your business early on. I understand that the angel ecosystem is different than San Francisco, where friends are willing to fund friends and there's plenty of angels to go around. But as a founder, really think about how you want to fund your business from the very early stages. And then think about how you want to structure your business too, from a corporate structure perspective and entity structure. So as a US VC, we only invest in US or Cayman entities. We won't invest in a Mexican or Brazilian entity. And there are very valid reasons for that. It's not that we don't want to. It's just that from a kind of liability perspective. Yeah, I mean, in Brazil, if you invest in a Brazilian entity, you can actually, every shareholder can be personally liable and personally sued. So you have to create some way to kind of have protections against that. So I think that's an important piece of it, that founders should figure out how to get connected to the right law firms. And structure their company in the right way. That just makes it that much easier for a U.S. investor to end up investing in their business.
Yeah, it's super important, both of those points. There's so many companies that we see that have built really good businesses, but they just come completely uninvestable.
Yeah.
There's a couple of cases where we've seen founders with single-digit equity after a big seed or an early A, and it just doesn't work.
Yeah.
We've been, I think one of the things, because we operate in the region, we're willing to kind of work with companies to restructure stuff.
Yep.
And that's been some of our biggest outcomes so far, is on companies where we've been able to convince a family office to say, look, you really need to dilute yourself.
Yep.
From maybe you own 60% of the company today, put yourself back to like 25%. And that 25 is going to be worth way more. You'd rather have 25% of a huge number than 60 of a small number.
Yep.
But that's a really hard conversation to have for a family office that is not used to VC.
Yep.
That
you might be used to operating businesses where they own. I mean, the mentality in terms of running a business here is you own and operate a business, and you put your sweat equity to work, but you own it. So that's a mentality shift that I think needs to happen when it comes to investing into startups here.
So if you could go back to when you first started investing in Latin America, knowing everything that you know today, what advice would you give yourself?
I think I would say spend more time on the ground, even more time than I because you really need weeks and weeks and weeks to really understand the ecosystem. Just walk around, talk to merchants, talk to people, get in Ubers, talk to people in the Ubers about what their life is like, how do they pay for things if you're a fintech investor. So I think it's really about spending time down here. And I think the other point to that, this is more for VCs, is this is obviously a cultural stereotype, but I think it's one that rings true and in a positive way, which is that people in Latin America really like to build relationships, and building relationships is what creates trust. And I think that's a really important thing for investors to understand, is that, it's so important to build the relationships and spend the time down here. I think it's very hard to be an investor from afar, not understand the ecosystem, not spend time down here with founders. The founders want investors who they can work with, want investors who are partners, want investors they can learn from, and vice versa. I want to learn from my founders. So I think it's really important to spend the time down here and build the relationships, because it is a relationship-driven culture.
Yeah, I think that's it's really good advice, and I hope to see you more in Latin America. I hope we get to do more of these, a follow-up, and do more deals together going forward.
Absolutely. We would love to, and congrats on everything you've built at Magma. Very impressive, and you have a great set of companies, and you've taken the time to really understand the ecosystem.
Thanks. Appreciate it. Thanks again for listening to this episode of Crossing Borders with my guest, Michael Sidgmore. If you like this podcast, please share it with a friend and give us a rating on iTunes or wherever you listen to your podcasts. It's the best way to help share what's going on in Latin America's tech ecosystem. Thanks to Angel, Sofia, and Josefina for helping produce this podcast, and thanks to you for listening. Have a great rest of your day.